Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday, September the 18th. Be a chart lesson for today. Really boring day from about, I'd say, 9:45 on. Started right here, and we spent pretty much the entire rest of the day in that 2 point trading range. There were a couple opportunities to get on these failed breaks lower, which um, later in the afternoon I was looking at it as a channel working up through here. Um, but early, I do believe there's a larger two-tiered channel, and you can see how it was coming in. Look at that midline coming into play. We got a break and a move to a new high, but you can't discount what you could find after these couple of swings either. You couldn't really find it as well off the top, but once you drew it across these two, and of course, when you see two match up like that, that's always a good place. That's what I call convergence. And notice how it bounced again, again, and again. So you can't deny this line across here, but at the same time, you could find this bigger two-tiered channel really, fairly early off of these swings down here. I adjusted it just a little. I think I had a little bit steeper than that at first, and I adjusted it just a hair, not by much. Um, but once you had these and it bounced the next couple of times, that really alerted you to these trades here. And there were multiple reasons to take these trades right here because you had the trading range and it's a failed break lower and there's an upward bias. We traded up into all this stuff, so the bias is still up. So uh, not a lot of trades today, but there were enough. You just had to be patient, and if you followed the rules and took all the bounces off the lower lines or the failed breaks lower, you did pretty good. And so, um, again, nothing earth-shattering. There were a couple of decent moves that you could have caught some runners on, and other than that, that's about it. So, but let's talk about the trades. Probably rather quick today. I've been distracted some this week. I apologize. I've been late getting the midday chart up, and I've been late getting this out. But my real estate project is kind of kicking off, and I've had to be out with it a couple of times this morning, and we may have some days like this off and on for the next few months, but till the weather gets bad or we get through. But for the most part, it won't be like this every week. So just kind of one of those weeks. But anyway, let's talk about the trades. And there's even actually I'm gonna circle this one. There's three early trades here, real early, from 7 o'clock or so. All of them I'd say are kind of um, they're somewhat aggressive. I'm marking them in green, but we'll talk about them. And this one is real close to green. I'll explain to you when we get there. And most of the trades were up because the bias is up and the EMA was up. We went flat right here, but traded up into that. So you're probably gonna, the bias says if you break out successfully, it'll probably go higher. Uh, doesn't always happen that way, but that's the bias, and that's the way we try to play it. That's what we expect most likely to happen. So. We had this little channel working up early during the overnight, a close outside right there, moved to a new high, and then we started working down. This close is real close right here, and this is a really bullish move up. So you expect the first time you come back to that EMA, you're probably going to get a bounce. Notice a new high, pull back first entry, pulls back. Shoot, I've grabbed everything but what I want to grab there. And notice how you had those little matching lows and it broke lower and turned. And this is one tick from being green bullish reversal bar. So it could have just as easily closed up as it did down. That, on your chart, it may have closed up. So I like that for a second entry, looking for that bounce and maybe even a new high, because this is so close to being a close outside that it may not be the close. So they're probably going to try to make this. If it bounces off the MA, they're probably going to shoot for a retest of the high, and they did. It came over here, but so I like that one for a long. It's a little bit aggressive. It's not perfect, but it's a second entry long. It's a bounce right off the EMA. If you drew this line, you probably wouldn't have had this really here yet. But if you put it off, if you just went ahead and placed it on the highs, and looked for your, the midway, you would have seen it bouncing off that line. So you could have possibly had it there. Um, and then you come down, and this is like a breakout pullback short as well. We still don't have a new low. I was looking for a new low. This is one where I like it breaking and wait for the trigger, the break of the, and then drop a limit order in there because it is a doji, and try to get a little higher, a little better entry, and ride it on down. And then you get the low. So now you've got your break of this little channel, two legs, two measured legs, and that's a measured leg down to a new low, and you get a first entry. That's a nice reversal bar. Some people might have even considered going long there, but I think you got to wait on a second entry, especially if you're thinking this may be the trend line down here. But when it tried to go lower again and failed and turned up, I liked going long there on a second entry long, counting off that low. Notice that's a new low, so first move up, pull back, second move up. It's a different type of second entry, but understand that's a second entry. Entry is just a second leg or whatever, so it's a different type than our normal that you're trying to count with the trend. So don't let that confuse you. It always confuses new people and makes second entries even harder. So if it doesn't make sense, just don't worry about it now. Concentrate on regular second entries because it can get confusing. Easy scalp right there. And notice that new low, first entry, pullback. That's a failed second entry. That's your little trap that catches people still looking for more to the downside. And you really don't want to enter short out of that. Look at all the overlap. Stems, a lot of stems and things. So that's a nice long there. And you could have caught a runner and rode this all the way up. And I really thought we'd probably go all the way up to somewhere in here, but it just didn't turn out that way, and we turned back down. But two nice longs right there. And it was tempting to go long here, but if you're paying attention to this midline, if you saw that, and you may not have seen it yet, but if you saw that, but either way, look at all the overlap, the dojis, and then you come right back down and you got three more dojis in a row. I just think you have to sit there. But when you get the failed second entry long that goes out the top first and turns and goes out the bottom, and this is real close to being green. I went back and forth whether or not to make this green, but I just don't, you can't go long out of that. So you're just sitting, and when you see the trap and you see it break higher and go all the way out the other side, you can't ignore that. And I know some other people saw it because somebody asked me about it. So it turned out to be a pretty good trade too. So runs all the way down to where does it bounce off the trend line. And you could have adjusted your trend line now off that close. And you really could have drawn these two already, but definitely by now, because now you got three touches. That kind of confirms that, hey, this line might be right, but it also confirms this line. So you know you got something going on down here anyway. This turns out to be really the trade of the day. Any runners would have been safe, and you could have ridden this all the way back up. And guess where I like to exit? Right at the next expected support resistance area, which is this line. And if you exit right in there, you got out within 2 or 3 ticks of the high. Nice run there. And notice the little channel, and you get the close outside, move to a new high, and guess what? Then it starts correcting. You get 2 legs down, and it bounces off this line. But it's really, there's multiple things going on. I just didn't see any way. I didn't think it was worth taking a short here, because you may be going back to this upper side, but there's no reason to go long in all of this stuff either. You got this little channel working down. I just don't see any reason to enter out of that. And it's obvious that you got some matching lows and matching highs there. So just sit tight. And then guess what? You get the failed break lower. I like that going long right there. It's a failed break out of that. It's a bounce off this possible line right here. And it just further confirms that there's definitely something across there. But a lot of reasons to like that long. And then it gets hung back up. And there's not really room inside here. You got to kind of wait on a breakout that fails. This one was really tempting. And look how many times we've bounced off that high. I really want to make that one green. I went back and forth and says no. But I don't know how you can, that's a low risk. Look, it's just a little bitty bar. You put your stop right there. It was a quick, easy move. prices were hung between this line and this was this little small green line. That was the high from yesterday. So we knew there was strong resistance because we couldn't get through there yesterday, and all day today we hadn't been able to get through there. So even though it's somewhat of a counter trend, look how flat the EMA is by that now. Um, you got room to get out. So there's a lot of reasons to like that trade to the short side. So I'm going to leave it. Um, I'm going to leave it green there. And then notice that you pull back. There's a new high right there. Pull back, first entry, pull back. There's a second entry long right there. But again, it's another one of those little failed. It breaks lower. It was tempting to go long right there. Um, but I didn't mark that one either. And if you did go long right there, when you kind of got hung up here, I don't know if I would have risked it to come back. But this one was tempting to go long. It really was. But I looked back over here and it almost looked like a repeat pattern. Look at that bar right there. This one did have the little break lower, but notice you've already been lower already. And here, the last time you didn't get lower. So it's a little bit different. Um, so some different reasons to maybe think about just sitting tight right there and seeing if you get a second entry. And you did get that right here. And you got that little break. That's like a little reversal bar. This one closed on its high. I like that one to go back to the other side. That's your two test of a previous low. Notice that low. You tested it once. You tested it again. Failed both times and reversed. It's a second entry long counting off that high. New high, pull back first entry, pull back second entry. It's a failed break out of this little trading range. It's a bounce off this trend line. There's just a multitude of reasons to like that to the long side. And it's right at the 2 o'clock, so I didn't mark anything after that. And this one was like right at the time limit where you're thinking, hey, I don't know if I want to go enter again or not, but it's within the rules, so nothing wrong with that one if you took it. And that's what I saw today. We'll move those two just so you can kind of see the other two looks. This is what I was looking at most of the day here. And but later on, it was obvious. If you draw that across there, it's obvious it's there. And if you copy it, you can see that's just the same line. And you copy it and you move it up. It fits right off those highs all the way up. You got a couple little breaks higher here. So, but really, you didn't even need that. If you just played the range, you had it. But if you see them all, you got multiple reasons to enter. You got more than one reason to enter. So we're usually when you get to one of those century marks, you test it over and over. And so we're back at that 2000 area, testing it again. And so we'll see where we're headed next. Every time we make hit one of these new areas, you think we're not going any higher, and it just keeps going higher. So they've been calling for the sell-off forever, and we had a little correction there, pretty good correction for a few days. So we'll see. Looks like that everybody's perceiving it as a value again, and we're starting to move up. But that's the great thing about day trading versus we don't hold anything overnight. So there's no danger of going to bed and waking up and the market having moved against you. Or, obviously it can move in your favor, but we all know how that works more times than not. It moves against us smaller traders because we can't ride out the big, the big corrections that correct just long enough to stop everybody out and then run right back to where it was to begin with. So, but that's the beauty of being a day trader, is that at the end of the day, you're done and you got no more risk in the market. And somebody asked me that. It was a recent question that somebody asked about, how I felt about the flash crash that we had a while back, and is there any chance that could happen again, or you could get burned in that? Well, if you're using your stops, I was trading that day, and I was not long when it happened. I was flat when that started, but I hadn't been flat, but just a very, maybe 10 or 15 minutes tops. I can't remember specifically, but I had exited a long, and most of the setups had been long up to that point, and that thing suddenly turned and started going down, but it didn't go so fast that you didn't have time to exit. And if you had your stop in there, I believe it would have been filled because it didn't just gap down. It traded through. And if it trades through, and that's the thing you got to remember, a stop order, a sell stop, or a buy stop, when it's triggered and executed, when that trade is triggered with prices touching it, it instantly becomes a market order. So you're going to get sold at the market or bought at the market. You're going to exit at the market. Um, yeah, there's a chance. There's probably an outside chance you might experience some slippage, but I don't think anybody would. I don't think the way in the electronic market is first in, first out. I don't think that you would probably have to. There would be any danger of a huge loss or some kind of catastrophic loss if it was happened the same way the last one happened. There's just too much volume for it just to disappear in a blink. So you're going to get out at market, whatever market is, and at the worst, you might experience some slippage. I don't even know anybody that experienced any slippage that day. I'm not saying there wasn't any, but nobody I talked to, and I've talked to a few people that were actually long when that happened and they got stopped out, but they got stopped out where they expected to get stopped out. So, and that's the thing. The most you should be able to lose is 2 points. And let's say it did move really quickly so that it moved through your order so fast that your market order experienced some slippage. Your stop experienced slippage because it could. Just don't ever use limit orders um, as your stops, because limit orders are not market orders. Limit orders, it's either you fill me at this order at this price or no. So yeah, if you're using limit orders, it could buzz through them. So make sure you always use a buy stop or a sell stop, and because it becomes a market order when it's executed, and you don't have to worry about all that. So that's the beauty of day trading, is that we do not have and that's why they allow you to have such small margin, because the odds of you losing anything really big are not nearly as much as if you carry something overnight. So, uh, but anyway, I'm going to wrap it up for today. Hope you had a good trading day. We'll be back tomorrow to wrap up this week. And so I'm done for now. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.